Welcome to the first Sunday night where I, Leo the Tiger, will be replacing Nick for a tick. He's definitely not just taking a Sunday off. He's being fully replaced. Don't believe any of the lies that you've heard that he's just taking the day off. It's definitely a replacement episode. And so I'm here with Pharm. Pharm, we're going to go through the week and talk about some markets. And I heard even the Bears were winning. That's bullish. Everything is bullish, right?
Absolutely. Absolutely. There could not possibly be more bullish in every single way.
Good to hear it. So why don't we just start right in with yes, in the glasses, I mean business. We'll start right in with what happened last week. And for me, last week is kind of a dull, boring week. I don't love to be super active on rollover week. We clearly can see we have I use non-back adjusted chart, so that's why you'll see this rollover gap on my charts. So we had a nice little liquidation and just rallied all the way through new all-time highs. And that was the FOMC candle on Thursday. Everything is bullish all the time, no matter what Jerome Powell says. And so that's what happened is we broke out of this little tight range here and we're basically at new highs instantly. So what's nice though is it did leave some breadcrumbs for us looking forward to this week as far as areas to watch for to give us that true look at are we going to continue just going up and to the right? I'm wondering if we're going to start going up and to the left, but that hasn't started happening yet. So that's where I'm at. Slow, grindy rollover week with one Thursday event that was not really that eventful, to be honest. And here we are at new all-time highs. So, Pharm, what's your take from last week?
Yeah, I mean, basically you had the break on FOMC, and I mean, basically it created a 4-day balance effectively on NQ, and sort of made the balance and hit the bottom of the balance, held the bottom of the balance, and then missiled off the bottom of that balance all at once. And ES was just basically a 5, and then we broke that out. Gap.
Wait, a 5?
Yeah, ES was a 5. If I remember correctly, I better look at my charts again over here.
What's
yeah,
a 5? Is that like a score?
No, 5-day balance.
Oh, okay, okay. I was like,
NQ.
I thought we were talking like scores, like she was a 5, but she went straight up.
No, she's definitely a 2. No, forget her. ES has been trashed lately. So she created a 5-day balance, had to kick her out of bed, immediately gapped. Like they never make it easy, right, Leo? I mean, because like if we had made that low, if we had made that low on FOMC and just kind of hung around there, closed kind of weakish. I mean, every trader and their mom is looking at it. They're like, oh, okay, well, there's a nice, 5-day balance, whatever, 4-day balance. And then like you look for some kind of a trade the next day, failed break at the bottom, and you're going to get long and you're going to slam it. You're going to make a lot of money. But I mean, they never make it easy, right? So they form the balance, they hit the bottom of it, and then they missile off of it, and then just gap out of it, the next day. So that's what they like to do, right? So I'm with you though. I mean, they left behind. It looks like you got my chart up, so why not? They've got that. I won't cover too much NQ. I'll leave that to you. That's your market. Even though you're you're such a fraud. ESF Leo trades NQ all the time, right? So I'll leave most of that for you.
Pharm, it's the irony.
But I mean, you're right. Like you've got this big fat LVN sitting there in the middle. That separates these two clean distributions. The upper distribution's a little bit cleaner to me. And so, bulls are going to want to see continued acceptance, at least in this upper distribution, or, a clean break higher. We had that spike on Friday. I think that's going to be our first order of business. I actually, for once, I'm kind of not really paying too much attention to the base of the spike on ES and NQ. More kind of like this 828, 839 spot is like the first order of business. But I mean, like big picture, until or unless we're finding lower highs, lower lows back, into this lower distribution here, bulls are in control. So hopefully we'll wake up to this by the morning And instead of going up and to the left, price will go down and to the left. And we can finally prove bears from 1932 correct after all, as NQ goes negative, just like Crude did. That's kind of where I'm at here.
All right. I mean, pretty much the same read, right? There's not much. I think the great thing about a week like this week, we've gotten a lot of things out of the way, right?
Yeah.
We got FOMC over with. Is there a 2-month break between this one and the next one, or is there one in October?
I think November, December. I think it's like a month and a half and 2.5 months, but I'm not sure.
Somebody in the chat can tell us. So anyways, we got that out of the way, that was anticipated. A bit of a policy stance shift, whatever. We got a rollover out of the way, right? And the triple witching, if you're into that kind of thing, there's a lot of new participation that's going to come in this week. And that's what I look forward to the most is, getting some of these boring, kind of whatever necessary evils of trading out of the way, so that we can look forward to at least not volatility from like, hey, we're going to go down standpoint, but just more activity in the market. The market's going to be more active starting this week, and hopefully through Thanksgiving, and into Christmas, it'll slow down there. So that's what I'm hoping for, but I'm not totally sure. I'm not sold that we're going to get a ton of activity because of the fact that we're at all-time highs, and the Fed just cut rates. I don't know. Maybe that doesn't bring a lot of players to the market to create a bunch of disagreements about where price is going to go.
I don't know. I think you're right, and I hope so as well. Look, like everybody was expecting that big money would come back from the Hamptons after the holiday, the beginning of September, and sell the piss out of this, and send it back to the 1932 lows where it belongs. And it just didn't happen, and participation remained
zero.
Yeah, I mean negatives. I mean, Crude went negative. I don't see why NQ can't. It's not. Did you know that NQ? It's not even a real company. Like I tried to reach out to investor relations at NQ. No answer. There is no investor relations. It's crazy, Leo. So yeah, I mean, so I'm short. Actually, I just covered a few from Friday because everything's so bullish. I kind of have a compulsion to short those spikes, Leo. It's kind of a thing. I was already out half, but like it had to happen. But no, getting back to it, like I think everybody was expecting that at the beginning of September, big money comes back and they do whatever they're going to do. But it's like we have a big FOMC. And like everybody knew what was going to happen on FOMC. So it's not like there was uncertainty that the market was waiting for, but like, I mean, you might as well get it out of the way. Right. And like, I didn't see some huge surge in participation. I don't know if you felt differently.
Just on Thursday.
Like
nothing. Friday is out, it's done.
So, yeah, I mean, it's been trash. So I wouldn't be surprised if, you see a shift in participation here, and hopefully they're all okay. No, I mean, everything is bullish, and we should be at 69,420 NQ by end of the year. Price will never go down. I saw somebody post something about a 2% pullback, and like, whoa, I mean, chill out, right? That's at least a level 10 circuit halt. So we're not going to go there. Everything looks great. And I heard, Leo, before we started that weekend Wall Street futures were up 0.5%. I wanted to get your thoughts about that because it seems that price is moving lower here at the open.
I haven't seen a weekend Wall Street tweet since COVID.
They're still at it, buddy. They're still at it. I had a couple of pings asking, what's going on? It's up 0.5%. And just
all right.
Please, traders, please don't look at weekend Wall Street futures. Just whatever you do, just please don't look at it and really don't trade it.
Yeah, I would recommend on the weekends, stay off Twitter, stay off the screens, unless you're doing some backtesting work or whatever it might be.
Yeah.
Especially now, football season, that it's beautiful outside in most parts of the country. Get outside, watch football, hang out with the family, stay away from social media and especially fin twit of social media.
But at least wait till FX opens, right, on Sunday night. Now, like
Right.
if you want to watch Bitcoin and an hour or two before open, like I don't know, like that's I still don't read too much into that, but around what is it, 5 p.m. I suppose you could start looking at currencies or something. So anyway, so yeah, I mean, I can pull a BS so we can like stop just shooting the shit and kind of get to business. I suppose ES is a similar picture, right? To NQ, relatively clean, double-ish distribution. I mean, if you want to call this nonsense, a third, or like depending on how you roll your charts again, like you could have a third from non-back adjusting back here. I actually don't back adjust, but I leave my Ninja. This is just the December specific. So that's why it looks this way. But so clean distributions, and I'm going with like 14 to 18. Like for most of the week, I was using 6707 to 10, I think it was last week, the weekly level. I'm going to raise it here to 14 to 18. And so the thing is, like after the spike, and a lot of these levels are the same that you've seen for a while, just the extensions. So the 29 to 33, but like you've got the spike up here. And I feel like if this fails back into the meat of last week's distribution, and then same thing from Friday, which is sort of like the upper edge of Friday's distribution is like right around that 14-ish spot, then maybe we get some weakness. And I mean, it's not like Friday's low is that far away. Though I will say, like, I don't see it as like a clean first pass, right? This market has been very, very strong. But my point is, like, I'm not going to assume that this spike has been rejected simply because, like, we're trading a few minutes before Asia's even opened below the base of that spike, right? I want to see clean offers, firm offers below, 67.14, whatever. And that's your first sign that we're perhaps not ready to leave this range to the upside anyways. But ultimately, you can see this, low volume area between these two distributions. You could use whatever levels you want until or unless there's clear lower highs, lower lows back in this sort of lower range. Then nothing's doing for bears. And that, like, let's be clear, right? Like that's like the bare minimum accomplishment that sellers would need to achieve, for this week, in my book, until we're finding the sell button below a prior week's low and not just getting wrecked shortly thereafter. Things are still very, very bullish. Leo said he agrees. He was just busy typing, chatting, probably.
I was letting my friends know that Nick's not going to be on tonight because I took over. So it's the Leo trades, not trades. I guess we're not trading Sundays, but the Sunday Open with Leo and Pharm.
With Nick off, there's going to be a significant drop off in the demographic of women aged 55 to 70. Which I mentioned a couple of weeks ago on him, that he's been killing it. He's been killing it, right? With the Cougars. I'm telling you, they love him.
Fired.
They love him. So, yeah.
Oh, man. Wow.
You want to cover NQ in more depth?
That was dirty. I mean, let's go over NQ because it's pretty much, a similar story. So if we can flip over to my screen for just a second. We'll wait for that bad boy to come up. All right, so this is the NQ. This is my long time frame 60-minute chart for NQ. Those that have watched on stream will be pretty familiar with what I'm looking at here. But what's interesting, and I was talking to Pharm about this before we jumped on, is there's not a lot of information to go off of because we're at all-time highs. And we just had that rollover. So, prior month data, kind of irrelevant. So what I'm looking at is this blue zone. I mean, the market was really at least kind enough for the past week to give us this double distribution look. And so for those that are new to looking at like volume profiles, this just tells us where volume was conducted, in the market, right? So we have a clear volume area here and then a clear volume area here. And what's nice about this, and why I say it's nice, is because we can just use that information to tell us what's, it's not going to be predictive, right? But it just helps you with context. So what Pharm was saying, like if we accept back into this distribution, we're likely to go to the other side of it. That's kind of, the first step and trading around, some of these distributions. Obviously, this is a longer time frame, so this isn't like a thing has to happen in a day, but it might take a couple of days. So we start working our way back through this distribution, and find ourselves in the middle here. This is where my decision point would be. Right now, honestly, I would be leaning a little more, looking for dips or longs to trade for continuation higher. We haven't seen any evidence of real selling yet. And until that happens, I want to be aligned with the market. Until we get to this point, this is where I will start to, make some decisions or lean a little more bearish in my stance of, I don't always, just get long. I'm not saying to just get long, but if we start to break below this low volume area, I would look for this other distribution to start trading and go to the other side of it. One thing that is in the way is this weak pivot, which happens to be the volume point of control for last week. I'm pretty sure that could be an area of support. There's a lot of, that's just tons of volume has happened there, but it was also some of these prior highs before we broke out. So that could be a kind of stopping point as well. To be honest, the sellers have a lot to work through, to start to break us down from this range. But we'll see like there's some things we can look for to give us the evidence that might be happening. So for me, this is the area of importance, just to watch for, to see reaction. We could, look for bids out of here, longs out of this range to continue upwards, or look for rejection. And once we do reject, use that as a confluence for, lower prices, basically. So that range is from 24,650 to 24,583, with a potential pit stop there at 24,536. So that's kind of what I'm looking at for NQ. I know Pharm already went through ES. Pharm, do you have the precious metals and CL? I know you said CL was going to zero and gold was going to infinity, but do you want to
Yeah.
talk through what you're looking at this week?
I mean, I said negatives to be clear for crude. Okay.
Negatives.
So,
Got it.
yeah. I mean, there's a poor low at negative 32, unfinished auction. So we're going to have to go ahead and clear that up. So let's see. Let me find where's my crude chart? There it is. I don't have much marked on there, but I actually was updating some charts, and I tried to open a Bitcoin chart with my volume profile settings, and like my whole computer exploded. It was not good. So I had to like redo all of my levels. So I actually have some very, very old kind of higher time frame spots on crude, 6211, 6219. So like kind of right there. Where that low of last week sat. That actually was 62.19, I think, wasn't it? So that's a big spot for me to see how this thing responds. And then I've got 62.56 to 62.61. Sorry, I'm looking up at one of my other charts here since my chart deck exploded on Ninja. So I mean, it looks terrible. It's definitely going to zero. You've got a similar look to ES and NQ where there's at least two relatively clearly defined distributions here.
That one is nice right there. I mean, you look for a retest of that, and I think that's a great spot.
Yeah. I think you look to get short there, targeting zero for the core of your position, holding runners for negatives, of course, because you don't want to paper hand a short on crude again. I mean, traders learned their lesson last time, right? But I am. This is a pretty big spot. I want to say this was a major monthly spot from maybe a year ago. Right down here in these 62. So I'm not really looking to press short in the hole here, but on failed attempts to get back up into this upper distribution, I definitely think you can lean on that as sort of a big picture trade for the week. The first step is going to have to be, getting back above these 62.60s, I think, first thing. And then, maybe you get a rotation towards that LVN for a nice short. So that's probably all that I would consider on crude. Let's go look at GC on its way to infinity here.
Infinity and beyond.
Yeah. So I call this a failed distribution down here because I'm cool, and so I make up names for shit. And maybe like this is from the Order of the Furu, ancient Furu. You just kind of make up names for words and shit. But you see how like GC kind of it traded up here, formed this upper distribution, and then traded back down into this lower distribution, and then it said no thanks. Reclaimed sort of this upper distribution. You've got a defined LVN here again. Sort of separate. It's not as clean and sexy a distribution as like NQ and even CL was, but I mean, you can still see the distinct LVN there, and the fact that this whole lower range was rejected. Looking at the trailing week, that's sort of where the volume from the trailing week sat. And so now we've accepted back here. And of course it's up because I mean, GC is always up nowadays since the dollar is going to negative infinity. And so, yeah, we could look for, back tests of, this LVN to see if that's going to hold. I would expect it to be active given the price action that we see to our left and the fact that these lower prices were rejected twice last week. And what was that? Looks like we have some singles from Friday. You can see this 30-minute period clean. That was
pretty clean back test of that break. Yeah, that prior high too.
Yep, that's exactly right. So I mean, if you put the levels on here, which I had before my chart exploded, but you can see it's like give it 3707-ish. This prior swing high and this nasty sell. You could see what happened after this was cleared, right? Sellers didn't quite give up here, and then they got ass blasted. You got looks like some singles through there late on Friday into a lift. So some kind of a back test, in this general area. I would look to see if bids come in there, and would sort of expect them to for a trip up to infinity squared. Actually,
hey, quick question, Pharm, on gold. It seems like the Wall Street Bets community has picked up on silver too. You notice that?
They have always loved silver. They sure have. I haven't looked at a silver chart in a long time, but generally the metals, I mean, again, like the dollar is going to negative infinity. So silver's on the moon, gold's on the moon. Interestingly, though, Leo, and I'm not going to open the Bitcoin chart because very bad things are going to happen.
Yeah, don't do that.
I'm not going to do that. Interestingly, like Bitcoin's kind of flaccid, right? Like, I mean, what's it doing? Why is it not going anywhere?
No, that's flaccid. A term.
Yeah, right. The bid, Leo, is flaccid, and so and that seems interesting. And the way that I see that, I'm not in the camp of like Bitcoin leads equities necessarily. I'm not there, but I look at it for clues, right? Because in an environment where liquidity is abundant, you would generally expect to see most risk assets, be able or have the ability to bid together. And Bitcoin simply has not joined the party. So I see that as a little bit of a warning sign. Another warning sign, I had not noticed this. I've been busy doing other things. So credit, to whom I got it from. But Paulo Macro, if you follow him on X, and I've never even interacted with him, by the way, but pointed out the fact that a lot of the IPOs lately have been sort of shitting the sheets after launch. Whereas like it was for a while, you'd get these IPOs and then they'd just go on a moon mission. And lately they have been petering out. And when you look at the new IPOs that come, even if they do get that initial pop, some of the IPOs from the prior week or the prior month, they get faded at the same time. So like, again, to me, that's another subtle clue, perhaps, that again, liquidity is maybe not as abundant as is advertised. So when I see things like that, it makes me wonder that maybe it's a little bit time for us to cool off here. And of course, by cool off, when I'm talking about equity markets, I mean like 0.1%, and then the circuit breakers trigger, Leo. So nothing crazy, right?
Yeah, right. Yeah. I hear you.
So, but yeah, that would be a nice trade on one nice trade on crude on the short side. I think just look at your weekly volume profiles, and then on GC, I think you could look for longs there, and that LVN, barring like some new market generated information that comes out and changes everything. So, what kind of data do we have, Leo, this week? I didn't even look, honestly.
Actually, I was just pulling that up. So let me pull this over. and we can go through it. So Monday, a bunch of FOMC speakers. They always come out after they come out of hiding after the the FOMC meetings. So we've got a bunch of that Monday, and then more of it on Tuesday. But then we have PMI Tuesday, services and manufacturing PMI. Then we have Fed Chair Powell speaks Tuesday afternoon. I wish Tracy was here to tell us what he was speaking about, because sometimes they have him speaking and it's like, hey, he's like at a dinner conference, like no,
It's like a
about
Beanie Baby
markets.
convention.
Yeah, but they still have it like marked as a red folder event. And then Wednesday, new home sales. Thursday, final GDP, unemployment claims, weekly, and then Friday, core PC. So there is a bit of there are some things to get us going if we need, some things to help kick off some movement, right? And I think a lot of people will be interested maybe in what the FOMC members have to say. So we'll see, maybe we get some movement on Monday from that, and whatever Fed Powell's going to be speaking about on Tuesday. So there's enough data coming out this week to get us moving if we need to.
Yeah, I have a feeling it might be one of those situations where, like, if we move, we were probably going to move anyway, right? Because, like, we've seen, like you talked about, I mean, like, maybe now it's time that, like, we have all the market generated information that we've been waiting for.
Yeah.
Participants should, like, know where we're going and what's happening and where the risk lies. It could be a situation where some of these data points don't actually matter, but they look like they matter, and the decision was kind of preordained. So I think we watch. And I mean, you can just feel, and you look at things differently than I do, but I'm sure you can you get a sense when there's different kind of size in the tape that's sort of moving price with intent. And when participation is a little bit more thick and full, versus just like, the call traders and the put buyers and things like that. So, I mean, we'll see if we get that sense this week, I think.
Yeah. When those heavy hands hit the market, that's an opportunity to jump on that trend and really push it.
Yeah, because I mean, they can change a trend very quickly, right? I mean, like when that size actually comes in to the market, and I'm not saying it's going to. Okay, I'm saying it's going to, but I'm not saying it's going to. But if it does, it can change things pretty quickly. So that's where that weekly LVN is really key. But now, since everything is only bullish, we didn't really talk about any kind of like upside targets for this week that you're looking at, or I'm looking at for NQ.
All right.
What do you think about that? Like, do you have any extensions up there?
Yes. So
we can look at since up only and up and to the left.
This is so for us, the extension up to the 1A would be 25,150. And then above that, we're looking for an equal distant move up to 25,500. I can't even imagine. You're just giggling, like what? 25 what?
Saying it. Yeah, no. I mean, like 20. Yeah.
It's 25,000 is a huge number. You think we just go test that and check a look at what's up there?
Yeah. Like, I mean, we should be at 25,000 on the Dow as far as I'm concerned. So, Perma Bear Pharm, right? But yeah, here we are, 25. Wow. I mean, it just feels like what was last year's volume point of control? Like 18.3 or something like that.
I don't even know.
Wow. I mean, I'll always remember 18.303, and I'm pretty sure it's like right around there, 250s, 300s. So it's a pretty big move that we've seen. I'm looking at, so I've got a kind of a higher time frame extension that I'm looking at up in the 250, so 25, 253 to 269, because since NQ is a meme market, you always want to have 69 in your level. So like, I mean, if you're within like 5 or 6, then you'll see a range that hits 69 on one of my charts. If there's some kind of extension, like I don't just always use it, but if there's some kind of extension within a few handles, it's getting
so
used.
It's 25
252 to 269 is kind of my
269,
big
okay.
one. I've got some smaller ones here, but I saw that. But also, I will say one of my extensions was basically right here, 838. And so that's why it's being used partially for my weekly range here.
Yeah.
Also being sort of the upper edge of this distribution. So that was sort of a big one as well. And then for ES, let's see. So I just kind of skipped to the moon instead of doing some in-betweens on NQ. But I think for this week on ES, I've got a big one, 50 or 67, 69, but actually to 67, 75. And like you could almost argue up to 82. That's a big extension for me. There also is a big one right here at 66, 88, actually, which is kind of right at the lower edge of that distribution.
Yep.
And like you can see, we've beaten the hell out of it from above. I mean, we really have. And so I wonder, like, I see this nonsense here, like these buyers wicks here. This one was overnight, but I don't know, it feels a little bit tested to me. And so I wonder if it comes back there, if maybe it doesn't hold. And like Leo said, I'm going to try to get this quote right. So correct me if I'm right. I think Leo said that if we offer the LVN on NQ, that it goes down and to the left backwards in time so fast that shorts from 1932 are proven correctly. Is that what you said?
That's what I said. Yep.
Okay. Yeah, I was making sure I got that right. So
yep.
That's where we're at. It would be interesting if we gave this back. Like you don't want to see us back in the FOMC days range. Like that's about, like, if all you look at is just look at the high, the cash hours high, cash hours low, FOMC, like I don't think you want to get back in that day's range, really. And that would put you roughly back below that in that lower distribution for NQ.
Yeah, because you would be now testing the re-entering the balance range, right?
Mm-hmm.
And you would theoretically you should go test that low.
Yeah. Yeah, it puts it on the table, right?
It does put it on the table.
Bearish setups have not proven provided bearish results for like a really, really long time.
Right.
But you kind of keep that in the back of your mind, right? Like you said, I think you're onto something, right? Like if you dip into this lower distribution down here, like I don't necessarily think it's a quick pass down to the lows, right? Like, I mean, I think, this volume point of control could be sticky. You've got trap sellers from that day. But like bottom line is you had Tuesday's high was here right at like 600. Okay. And then I think this was Thursday's low at 600, like almost perfectly. Right. And that basically that's the spot. Right. And so that's kind of why I'm using, like, just call it 600 if you want. But like bottom line, kind of right around here. I don't think you want to see us offering, this 563 to 599 and finding exceptions back in there. Again, a quick dip down there that just kicks right back out.
Right.
Long for me, for sure.
Yeah, if you get a V-shaped move out of 24 530s, you want to get, that's the move you want to get on, right? You don't want to fade a V-shaped move out of that the thick of that volume node.
Yep. Don't hold your short runners in that situation. You're round tripping them almost certainly. So look for the reverse button or something. So I agree with that. But I think if you just want to keep it simple and look at your FOMC day range on a cash hour basis, like you probably just don't want to get back into that if you're bullish. So ES upside target I mentioned, that's the only one I'm going to mention. We're not allowed to go higher than 67, 69 to 75. So top. Just kidding.
I remember one of my friends called it top on the internet, and then he left the internet. So don't be that guy.
Yeah, no. I have behaved myself, but I'm in a bit of a mood here today. So I'm not gonna call it top until there's reason to call it top, right? If we give back, like bare effing minimum would be to find acceptance back in this lower distribution, but like you still need to take out a prior week's low, find the sell button below it, establish value lower, and like even then it could just form a 3-week balance and zippity right back up on the 4th week, right? So there's no reason to be getting crazy calling top. A lot of people calling top before even 5 p.m. on Friday. There was people out there calling top with us at all-time highs, and so I'm kind of making fun of it a little bit by talking about things
Yeah.
going negative and all that
Yeah.
kind of shit. But
Yeah.
no, it looks good until it doesn't. And
Yeah.
the burden of proof has remained on sellers for a very, very long time.
Right.
I'm not chasing highs, but
Yeah.
I'm not chasing, I'm not shorting dips either. That's for damn sure.
Yep. Hey, speaking of things to happen next week, did you get signed up for the 4-way battle, the NinjaTrader Arena?
I didn't really see the details on that. So is it just you four guys, or like anybody joining, or like I haven't even looked? But no, I did not.
Yeah.
No.
So why don't we go over it real quick? I've got it on my screen.
Please do.
It's on Thursday. It's all day. You can register for free, so there's no cost to enter. You can watch me, Nick, Stowe, and XY will be on all day. And we're calling it a 4-way battle, but really we can't win anything except for bragging rights. But they're paying 20 people, the top 20 people they're paying. So there's 5,000 in prize pool money. And what I like about this is that it's not a, YOLO contest. You'd start with a $5,000 account. You can trade 5 micro NQ or 5 micro and 5 micro ES. So you don't have a ton of wiggle room to, if you make a big mistake, you're not going to be able to, double down or come back from a $16,000 hole like my friend So did last time we had a NinjaTrader Arena contest. No, I'm just messing with you, Stowe. But yes, it's Thursday. We'll be on all day, and we'll talk. We'll be taking down the bragging rights for whoever wins, and then whoever loses. I don't know if they even get to come back. I think that's the thing, is if you lose, you just don't even get to come back to the Ninja live stream ever again. You wouldn't want to.
Possibly thrown off the planet even. Like you have to go to Mars with Elon, maybe.
So sign up. It starts in 3 days, 3 days and 14 hours. There's a big countdown timer. But that'll be fun.
That does sound fun. That does sound like a lot of fun. It's a lot of time that you guys are committing. Good for you guys. That's
well,
kind
Jim,
of you. Sounds like a lot of fun.
Jim has he's gonna lock us in. We get a 1 hour break for lunch, or like an hour and a half break for lunch. So we are getting to eat. But we're gonna grind it out all day.
Now, like, are you gonna use? I mean, this is really heavy pro trader stuff advice here, guys. So, like, are you gonna just be using a catheter, or do you keep like an empty milk jug under the desk, Leo, for that?
Well, I won't get into that.
Wearing a diaper. Okay, wearing a diaper. Got it. Yeah.
You gave away my secrets, damn it.
Our secrets. Our secrets. Depends. Just don't leave home without them.
That's right. That is right. And we're gonna leave that at that. How about that?
Good times. Somebody asked a question. How do I find purple zones? I mean, I just draw them on there, basically. So most people sort of assign me as a volume profile trader because I have them on my charts. Leo's a much better volume profile trader than I am, and probably all of the order flow guys. I look at volume profile, market profile, what I call supply and demand of price, some other things as well within price action, and make my assessments of where the edges or prospective edges are going to be, right? I mean, obviously on these ranges and these levels we've never traded before, you've got to use some kind of extension. And we all do that a little bit different when you're trading at all-time highs, right? Some people will use like fibs off a leg of a move, or some people look at balance ranges or distribution size or standard deviations off of a value area. I mean, there's just a lot of different ways to do it. And of course, for each of us, we're the best. We're the only ones, right, Leo? We're the only
yes,
my
we
level.
Are the best.
It's
yes,
my level, and I'm
my
the
level,
only one.
My model. You can't touch it.
Yeah. We're kidding. We're kidding and having fun at the expense of some others that are perhaps a little bit braggadocious. And go ahead.
The important thing is to stay committed to a consistent process, right? If you're going to use fibs or extensions or pivot points or anything like that, have a consistent way you view the market. You look at the market before you start to interact with it. That's the most important thing. While you're learning, you're going to strategy hop a little bit just because you're trying to learn what the hell you're doing and what the heck the market's doing. But after a period of time, you're going to settle in. And when you settle in, you really want to focus and stay consistent with your approach.
Especially once you realize that your way, Leo, is the correct way to do it, right? Once the new traders realize that.
Exactly. Yeah.
That's exactly right. No, but so like, I mean, levels that we've traded or ranges that we've traded, like you can see both Leo and I we're eyeing this LVN, right? Like we might look at different specific areas within there, but we also know that we're probably not pressing a short as we approach that low volume node, right? We're probably looking for some kind of a reaction to take along, and then flip side, if we're back below it, generally we're probably looking to maybe offer that if it's given us reason to do so. But then each trader is going to have different approaches for like maybe where they feel like the edges might sit, across a different distribution or like within an LVN if they're looking at a more specific spot in there, and like that's all fine. The big picture stuff is generally the same, I would say, at least when it comes to profile traders. And like, there's a lot of newer traders that don't even know what it is, and they'll see a volume profile on a chart, they'll get intimidated. Or I mean, really a TPO chart with like letters and shit. And you're like, why are there letters on this? Like, I thought you were talking about prices. And it really does not need to be. Like a TPO is like, it's a 30-minute chart. Like that's it.
Exactly.
And like looks at time and like how much time you spend in those spots. And so all these new concepts, like they're not that hard. And so like if you see somebody's screen and like I don't think mine looks intimidating, just has a volume profile on there and some shitty ass rectangles, right? But like some people flash, like, let's be honest, somewhat intentionally, some of these like really intimidating looking charts with all kinds of shit on there. And like it just doesn't need to be like that. So I encourage like all kind of like traditional technical traders, like I feel like if you just add even a little bit of volume profile, market profile to your trading game, you're at least probably going to avoid some serious mistakes that are very obvious to us. And I think you can pick off some different types of trades. A lot of newer traders feel much more comfortable in trend. Do you like trading balance or trend better, Leo?
You know what? Give me a balance range and I'm gonna tear it up. Give me a nonstop trend, and it's just not for me. I'm hands off, My friend Stowe is just like, he is the trend trader. He can buy high and sell it higher until it stops.
Yeah, I mean, I'm with you. Like Friday was glorious to me. I mean, Friday was glorious to me because you had very clear defined edges. I don't have my levels on here that I had for last week, but I mean, it was just beautiful two-way trading across. And so like you can make money on the short in the morning, you can flip long in the afternoon, you may just make money both ways, not to screw around in the middle probably. And so that's balance, that's range trading. And so there's a lot of us that, again, like if you're a newer trader and like you kind of need those big clean moves with follow through, and you struggle on those days, like, you're leaving a lot of money on the table because balance trading can be extremely lucrative because, even if it's ES is in a shit range of like, 25 handles for the entire day, if you pick off 10 on the long side and 10 on the short side, like you've hit the whole day's range almost, you know what I mean? Like it's a great day. So yeah, just adding a touch of that, I think, can be very beneficial to newer traders, at least knowing where not to initiate a position. I think that's like a good learning tool from volume profile. So
and being able to identify a range that exists and where the middle of that range is, where you don't want to play around and where the edges of those range are. And then also, if you can identify a range, then that also means you can identify when you're leaving a range, right? And that's just as important as being able to, to trade a range, is to know when to not trade the range, when to take off your range trading helmet and when to take put on your, we're going higher helmet.
Yeah, that's right. I mean, if you were trading in a range and shorting the top of that range was working fantastically, and then all of a sudden you've left that range and you're no longer in that range, and you're like, oh, well, it's even higher, I'll just short it now. That seems like a great idea. And you're like, whoa, what just happened?
Now.
This was not an advantageous price for me on the sell side. All of a sudden, everywhere you were shorting for the last 3 days is generational low, and like that's how it works, right? And you're going to find yourself longing that for the next, couple of days, if you're even lucky to have it hang around that long. So that's right. It just doesn't need, my point is it doesn't need to be that intimidating at all. There's a lot of materials out there that are free, whether it's mine or Leo's or like literally anybody. There's stuff out there. I mean, some of it's shit, but just the basics, I think, and you can always find good stuff.
Yeah. Yeah. And it's, it's important to know that price discovery does happen and you don't want to be on the wrong side of the price discovery, right?
Yes. Yeah. I mean, the biggest thing, I mean, to me, my number one goal is to not lose money in trades, like a lot of money anyways, like take small losses. A lot of newer traders always say, well, if I could only hold my winners longer, and like, that's true. Okay. I mean, it is true, but like, to me, if you're not profitable at all, then like holding your winners longer is probably not the path to profitability. It's probably taking better trades first and taking fewer losses and smaller losses. And then we can work on taking and holding your trades longer. And again, like if you're a profile trader, there's a situation where like you can know with pretty solid confidence where your trade is going.
Yeah.
And so like if you're green on the position, you can know that like I'm going to hold this shit until it's invalidated, until I'm stopped. And in my room, traders have seen me hold shit all day long. I think you and I actually held one day, maybe a month ago and 1,000 handles ago or something. It seems like already we're in the same trade that we're just sat there the whole day on NQ. And then, the target finally hit like in the last 5 minutes or something. And it was just like, oh yeah, of course. I mean, of course it hit. Right. Whereas most traders were chopped up in the middle because, they don't like trading balance. And like, I get that. And you'll, once you get into some of this stuff, I mean, you'll understand why we talk about, avoiding the middle. Everybody knows don't deal in the middle, but if you don't know where the middle is, that's not very helpful information. It's not a very helpful anecdote. Don't deal in the middle. And you're like, oh, I'm not. This is a higher low. It's a higher low right in the middle of a balance. So right at volume point of control for like the last 5 days in a row, like you're just going to get chopped up probably. So.
Well, I think we've gone over a bit of what happened last week, what's coming up, economic events, the 4-way trade all day stream on NinjaTrader Thursday, where all my friends are going to lose to me, and they're just not even going to be able to show their face. And then we've talked a little bit about some trading ideas. So we'll open it up for Q&A, and then if you guys don't have anything, we will we'll shut this thing down. What is the market doing right now, though? We just had a little rotation lower at the open that got bid up. Looks like
naturally, yeah. I think NQ held that 828s, and ES just kind of barely wicked below that 14
right at yesterday's value area high. Yep.
Yeah. So
look, we're gonna have another open gap up. Yay!
Yeah. Jinx it, please, Leo. Jinx it.
Yes, I'm mega bullish. We're going to the moon. We're going to 25,000.
Yes, sir.
25,000. Honestly, I don't think that's out of the question because look, it's 24. 900. There's 100 points away to get to 25,000. Let's just go ahead and ring the bell. Let's get it over with, and then hopefully there's some sellers up there.
Yeah, hopefully. I want to say the straddle for money. I haven't looked, so like, don't think I'm an idiot. I am an idiot, but like, don't think I'm an idiot. If this is wrong, I'm an idiot for other reasons. But I think the straddle on ES is like, I don't know, 22, 24 handles or some shit. So
for the
it's one of those situations. No, for the day.
Oh,
for
okay. I was like, oh,
no, for Monday. I want to say like, I don't know, maybe it's 80 or something for the week. I mean, it's not big, right? But I want to say it's like 22, 24, something. You can, I mean, we can look, but I'm not going to. So like, I mean, I feel like if you see, this thing get a little bit extended, anywhere up in the 6740s, 6750s, and like you wake up to that, like, I mean, I feel like we've had this happen when I've been coming on for the morning show, which I think I'm only doing a couple days this next week, but like a lot of times we're just trading up there on the moon, and then there's like this big ass fade, which is around 5 to 6 my time, so like 8 to 9 or whatever, right? And maybe we end up opening on a true gap up, maybe it fails and like we open back in range or something like that. But I would just be a little bit cautious if this thing does get silly to the upside, chasing the rip. That's one of your trades always, and would be a setup for Monday if we open above Friday's high, somewhere. You'd look to see if that is able to sustain a bit above Friday's high, right? So if you're in the 40s or 50s or something, which is like, again, I think you're closing in on the daily straddle up there. Look for that inventory correction, which just means a pullback, fancy way of saying a pullback that, maybe holds Friday's high on NQ or ES. But anyways, continue to the moon.
So I think this is a good question that kind of piggybacks off the conversation we were just having. So in balance, how do you identify the edges? Does price need to test and edge more than X number of times? How do you know the middle? And then how do you identify price discovery? These questions kind of go hand in hand. So I don't know if you want to pick up a chart, part of the chart that kind of illustrates what we're talking about there.
Yeah, at least on a weekly basis, what's in front of us here is, again, the volume profile really helps. But what you can see is that this sort of forms a nice relative D shape anyways, this upper distribution here, right? And so sort of tapers out here into this edge. So, before we had this move, right, we had a pretty clearly defined upper edge. Anytime price would get up above around 67.12 to 14, especially on a cash hours basis, it would start to fade. And so you would see that as an upper edge because price, continues to fade away from that. And then where does it tend to gravitate to when it fails that edge? Well, it, comes right down here into, around 66.90-ish or, 87 to 90-ish, which you can see is roughly kind of the bottom edge, at least of where the meat of this volume on this upper distribution is taking place. So to me, something like this for Friday, the trades were basically just sell a failed break of this upper edge, which for Friday I think was more like 10 to 12 I was using, and then to long a failed break of the lower edge, which was 87 to 90. So we got the failed break overnight, and then it actually just held on Friday. So that's where volume profile just provides a nice visual. All it is volume by price instead of volume by time. And you can learn what the different shapes mean, but an edge is an edge, and like you can kind of see it's an edge there, right? And then you get this low volume that happens to be a multi-distribution week. And so like once you're back into this other distribution, then you have new edges, right? And so, all these traders are trapped if they were long. If we were to get back down into, this lower distribution. And so that's why then this, low volume area, as price moves quickly through there, if price were to return, we were talking about that on the crude chart, right? So if price were to return to that area and all of these longs are bagged up here, you may find this area to be then resistance, or maybe it's just the upper edge of here. Now, I will add just like one thing, like the crude chart's a busted ass chart, right? Like, that it's a short, right? Like it's going to zero and possibly negatives. So a return to an LVN that has trapped longs above it is much more likely to be reactive as a short than the situation where, let's say, ES quick or NQ, quickly loses, this low volume node, gets back into this lower distribution. Like Leo talked about, it's entirely possible that we come down in here and then we just V out of here, right? Whereas crude, it's far less likely that it's just going to come up, because it was trading like, its analogy, it was like here, right? And then if it comes up, it's less likely, barring some catalyst, that is just going to zip right through that LVN and cross to the other side. Like it could happen, but it's far less likely because it's a busted ass chart. So find your edges, know where you're at. Are you at the top of range, bottom of range? And then know when you've left that range, like Leo said, and that low volume area sort of separates your ranges if you happen to have a multi-distribution week. And like, again, it's not like a week. Like you can draw a profile on whatever the hell time frame you want. You can do it on a leg, you could do it on a custom time frame, a month, a day, whatever you want to do as you get more advanced and find your own edges that way. It's just a clean picture of finding edges to me.
Yep. And then that's a great summary there, but just to kind of iterate on like, how do you know when price discovery, when we leave that range, that's what we were referring to as price discovery. So once you kind of have an established range where you have some highs and lows that just continually get, recycled, right? Respected. You're building volume around that range. And when you leave that range, that's when, new price discovery happens, because it's kind of like everybody said, okay, we're done with this range. We're going to go trade somewhere else. And so the market goes to a new, it goes and finds a new range to trade. But when and the process of doing that, it's going to go basically straight up or straight down until it finds that new range to trade.
Yep. That's exactly right.
It's
Now, we didn't have a whole lot of
as old as
time.
time, right?
It is. Now, did we just run out of time for that maybe on Friday is the question, right? As we come into this week.
Right.
Did we just run out of time for that on Friday? And this up move is incomplete. And we're going to accept this move from Friday. And we just gap to the heavens, right? And like Leo said, since we've left a recent range of consolidation, maybe we just zip up to, and I would be roughly targeting, probably not in one day, but in a couple of days, I think we make it up here to this 67.69 if we are able to sustain above, 67.30, like whatever extension you want to have. Like Leo said, you could see an aggressive trending move at least initially, and then you'll find what you'll see on the profile is that somewhere up here you would have a nice relative D shape. It's never perfect as the market does find balance, but that's the question. That's the question that's in front of us this week. Are we leaving this range? Or is this going to end up being a failed break?
Yep. And just real quick, Nick is in the chat. Nick, we have breaking news. The NinjaTrader Network has determined that this is Leo's stream now for Sunday afternoons. So I'm taking over with Pharm, and you're done, bud. You're definitely done. Hate to break it to you.
And they did say they were going to claw back like any pay or like any benefits or anything like that, right? And give it to us, I thought.
Maybe I wasn't going to say it, but since you said it.
Oh, sorry.
All right.
I let it out.
We're right up on the hour. So why don't we beg for some likes and subscribes so that you can get back with your day, finish watching Sunday Night Football. Are the Bears still winning? I'm not sure. It looks like they were doing pretty good. Somebody tell us.
Somebody knows, I'm sure.
Somebody knows.
So yeah, if you guys think Bears that I'm overweight and have bad jokes, hit that heart-shaped button. That's what that one's for. And then if you like the show, hit the like button, which looks awfully similar to that heart-shaped button.
Are you drinking coffee?
No, it just happens to be a coffee mug. It's orange soda, Sunkissed Orange Zero. This was my NinjaTrader mug, but it died.
Mine? Did you put it in the washer?
My daughter did. Yeah, she does the dishes.
Yeah.
So she didn't know.
Yeah.
I mean, it's all good.
Yeah. Same thing happened to mine.
She lives with her grandparents now. After that.
Same thing happened to my wife. She lives with her grandparents now.
Right. Gotta let them go sometimes, right?
Yep. All right, chat. That's going to wrap us up for Sunday prep with Leo and Pharm. Just as a reminder, Nick will not be back next week. He's never returning. He's never going to be returning. And I want to say thank you for joining us this lovely Sunday afternoon. And, we've got a bit of a plan for coming up this week. Let's see what we can get out there and crush it. Don't forget to join us all week on NinjaTrader Live as we trade the markets, talk macro, and all day stream on Thursday that Nick is definitely not going to win. So with that, we'll see you guys later.
Have a good evening,
night.
chat.
Bye.
See ya.